start? Shall we start? بفضلك ده مش بيشتغل.
Testing.
Shall we start? You don't have.
It's working.
Oh,
They're a bit confusing. When the light is on, that means you're not speaking.
shall we start now? Shall we start?
Sound check.
Morning.
Now we can start. Well, good morning, all esteemed panelists, distinguished guests. I would like to welcome you all to this session, the first of 5 panels introduced by Commercial International Bank Egypt on the margins of COP27 Sharm el-Sheikh, under the title of From Africa to the World. Our topic today is the business case of adaptation finance. Hello, Roberto.
Hello, good morning.
Case of adaptation finance. Can we share a few slides, please? And brain trust. Can we share the slides, please? Our topic today is the business case of adaptation finance or brain trust. The underlying concern is the question of, can Africa feed itself? Can Africa feed itself? Precisely, can financial institutions help Africa feed itself? This is our concern today. We have 3 components. I think I'll start again. Now, I'll start anew. I want to welcome you all to this session. Our title is The Business Case of Adaptation Finance Brain Trust. And the underlying concern is this question: can Africa feed itself? Precisely, can financial institutions in Africa help Africa feed itself? Can we turn to the next slide, please? We have 3 components to this topic. One is the challenge. Climate change has led to droughts and flooding that left around more than 250 million inhabitants in Africa on the brink of starvation and hunger. Adaptation finance is so far lagging and much below what's needed. It's almost, and we will hear it from Dr. Dorsuma, around 20% of what is needed. Why? Because so far it is perceived as the domain of public funding. Why? Because it's perceived as unprofitable. It doesn't have a business case and it does not entice private sector. And that's the challenge. Now, this is the opportunity. As you see, the global financial system has $379 trillion as reported by the Organization of Economic Cooperation and Development. So you have $379 trillion with private investors, 1% which is enough to cover the SDG gap. Project, we need quarter of the 1%. Only a quarter of 1% would be good. Our challenge as financial institutions is to work on the bankability and investability of projects in food system. So this is the challenge, this is the opportunity, and the solution, the proposed solution that should prime our discussion is The following slide. The following slide shows the power of commercial banks and institutional investors compared to MDBs. As you see, this is where the money is. MDBs facilitate, but if we're working on WAFI, we need to engage commercial banks. MDBs facilitate, they do a wonderful job, but they are not there to fund. The solution is, can we flip? This is the last slide, and then I'll welcome. What we're proposing today is the Brain Trust. It's an envisioned prototype that we're going to test in our discussion. What is Brain Trust? It's about getting a very robust governance mechanism for each adaptation project. You get the science, you get the bankers, you get the investors, you get the technology to make sure that these elements are addressed: the project design, the instruments, the data, everything that's required by private investors, by global investors, so that they will be happy to invest in these projects. No compromises. The risk reward formula is very well addressed. No concessions, no funding, no grants. If we depend on this, definitely we are doomed to starve, and our financial stability would be at stake. So with this introduction, I would like to welcome our panelists. Fortunately, we have the right experts, thought leaders, to address and test this program, either to challenge it, to improve it, or this is just in a very nascent stage. So now I can sit. And I would like to welcome Mr. Hussein Abaza, Chief Executive Officer of Commercial International Bank, Mr. Osama Al-Qaisi, Chief Executive Officer of ISIC, part of the Group of Islamic Development Bank, Islamic Corporation for Insurance of Investments and Credit Experts. And I would like to welcome Dr. Dursuma, Director, Climate Change and Green Growth, African Development Bank, Mr. Talha Karim, he's the Chief Risk Officer of Commercial International Bank, and Dr. Roberto. Now we would like to see you on the screen. Dr. Roberto Ridolfi, he is the chairman of Link, and he has wide expertise. Let's kick it off now, and my question is for Mr. Hussein Abaza. Why do you think global investors are not enticed to invest in adaptation projects? What's the turn off?
Good morning, coming. I think no one will argue as to the importance of adaptation finance or sustainability finance. Especially, I think adaptation finance is critical. Mitigation finance is very important. You don't want to further damage the planet. Transition finance is great. You want to utilize your assets. But adaptation finance is where the damage has been done, more damage will be done, and we have to live with it. How do we live with it? And for Africa, water, food, this is the place that's most hit by drought, most hit by famine. The last time there was a famine outside Africa was 1812 in Ireland. So it's been a long time. We've had all the famines. So I think it's, as Delia was saying, I think there's a perception that adaptation finance is not profitable. And I think this perception is coming from a lack of knowledge. To give you a very good example, Yani, my colleague and myself have about 60 years experience banking between us. To prepare for a 1-hour panel, we've been studying for the last 5 days. It's really embarrassing. Yani, had it been most other topics, you probably could have winged it. And I doubt that we'll make it. But we've really had to work hard. It shows you the shallowness of how much we know. Okay, that's to excuse any future mistakes I'll make as I speak. And I'll give you another example. I mean, at CIB, we go through a credit course where people are, it's a very intensive thing. We're taken off our jobs for a full year. We attend classes like students, we examine. If we fail, we flunk, we're out. And we study, basically this course is about risk assessment. In order to assess risk, it's constantly drummed into our minds. You have to understand the project to be able to identify the risk and then mitigate the risk. We look at production risk, we look at supply risk, we look at demand risk. We never look at climate risk. We never look at adaptation risk. For us, this is something that's brand new. The more we understand it, the more we'll be able to tailor make better facility structures and better implementation for the projects because they are profitable. We've had case studies where we've had water desalination plants and they are extremely profitable, but nobody's aware of them. It's all considered because we think they're not profitable that the public sector should take them. So I think it's very much a matter of knowledge for us as bankers, because once we understand more, we will develop. That's the way finance started as lending money, getting interest. Now you have structured finance, stream finance, you have level finance. So it's more, the more we understand, the more we'll find better solutions and technology will help us.
Well, Hussein, you pick it up very fast. You're sharp. As I remember, you were the sharpest in the credit course. He was the sharpest, right? And he instructed the credit course after that. So, I mean, you nailed the point that for seasoned bankers, environmental and social risk is still new. That's why if you want to address and prove the bankability of adaptation finance, I think we need to de-risk. And this is where, Mr. Osama, please give us your overview. How can you help de-risk adaptation projects, and what's the role of the Islamic Corporation of Insurance?
Thank you. Bismillah ar-Rahman ar-Rahim. Thank you very much for inviting me to be a part of this panel. And good morning, everybody. Let us say that brain trust, is it trust brain or brain trust? And I categorize it, it's all about innovation, partnerships, knowledge. And this is why we are here today, to forge ahead, to see structures that are innovative, to see the partners that we can work together, like it was mentioned that in the presentation, that MDBs, they're facilitators, and this is what we are, in order for us to see how we can work together with the commercial banks, with the private investors, in order to fund these projects that they are at risk and we are working on. Knowledge is extremely important, and similarly to CIB, we are learning as well as we go. We are still haggling with the terminology, terminology from insurance, terminology from climate action and banks. So we have to adapt our terminology as well to that. ISEC is a multilateral insurance institute. We are a part of the Islamic Development Group. We are very niche, where we only focus on trade-related projects or finance projects. Ever since we started operations back 28 years ago, we underwrote close to $92 billion in trade facilitation and as well facilitating for the flow of foreign direct investment. This is offered to the member countries, to our partners, be it commercial banks, be it international financial institutions, be it investors from the private sector. We have products that are geared toward the investment, which is the non-honoring of financial services by the government, by the sovereigns. And number two, we have the FII cover, which is for the equity investors. Similarly, on the trade side, which is relationship between banks, it is the documentary credit insurance policy, or bank master policy, that is relationship between the sovereign, if it is an obligor, and between the policyholder. When we look at the solutions that are available today, rightly it was mentioned, and I will not talk and dwell about the solutions that are conventional. I would like to talk to you today about, Islamic finance, where a lot of institutions and governments, they haven't tapped into it as of yet. And here specifically, I'm talking about Sukuk, where I do believe it is bankable. It still have lots of room for the capital market to be involved in order for us to raise cash from the Sukuk. When we categorize the member countries where we are operating, Rabu, when we categorize the member countries that we are working, we'll take, for example, sub-Saharan African countries. We see that of the financing is coming from equity investors, or it's coming from banking from the issue with investors that are from the private sector or equity investors, that the tenor that they would like to have in any project is very short. They would like to exit very quickly. Similarly, in respect of the local banks, when they give the loan, they would like to divest as well, and they would like not to stay for that long tenor. When we go into the other challenges that banks and financial institutions they face in sub-Saharan Africa, one, the bankability of the projects. If these projects are bankable, we talk about the credit rating of the sovereign as well, and we talk about the grand economic conditions that are surrounding the economy, how it is run. Majority of these economies, we can categorize them as economies that they're weak and they are not rated and they have financial deficits in their budgets. What we are proposing here, and this is something that we have put together, it's a Sukuk product, can be conventional, could be green, and this is something that we have started working with the Emirate of Sharjah in the United Arab Emirates, and we are working on the first case with them. ISEC, usually whenever we work with a sovereign that has low rating or no rating, we lend them our rating, which is by Moody's AA3 rating, and this will enhance their rating that this way when they go to the market, the banks they will utilize our rating and not the rating of the country that they are undertaking the risk. The bankability for the equity investor, we can take that risk. He can sell out and he can exit. And similarly, for the banks that they are financing, they can transform the risk into tradable notes over the, of course, and with the maintaining a very small share of the risk while divesting from the risk that you are selling over there. These are tools that we can put to use. We can work with specific banks to see how we can work to tailor to the need of the bank and to the financial investors that are with us. And you mentioned here as well in the presentation, financial investors, usually they come from insurance companies and pension funds. And this is where we have to tap. We have to tap into this sector. This sector, this is where the money is. And I do believe if CIB, our partner in many cases, we can work with them on issuing these sukuk. We can go to the international private investors. They buy these sukuk. They release the funding for more projects to be done. Then this way we can facilitate the transfer and bringing more capital from the free market into the Africa and for these specific projects.
That's great. And I think this is very comforting. This is good news for commercial banks and investors. So the de-risking is there. You can cover country risk, foreign exchange risk as well.
Sorry?
Foreign exchange risk. Because I know lots of bankers will face this.
We try to stay away from foreign exchange risk. I know that MDBs do it. I know EBRD, they take that risk. But what we're trying to do going forward is to try to support the issuance of local currency.
Thank you, Mr. Osama. We're really tired with the audio system. I'm sorry, but I think what you mentioned that's very supportive and encouraging is that you can tailor. And this is what is needed at this stage. You have a wonderful base and track record, but tailoring and innovating for specific adaptation projects, like what does it take? I think this is very important. And thank you very much for introducing the role of ISEC, which gives us full support and potential to consider brain trust. Now I'll turn to Dr. Dorsuma, African Development Bank. Whenever I browse African Development Bank programs in Africa, I come across successful adaptation programs. I think this is what encouraged us to dare argue that they have a business case. Could you please elaborate on that?
Hello. Thank you. Thank you very much. Let me, before I address your question, let me put it into context, globally and also in the context of Africa. As you know, the global climate financial architecture doesn't really work so far for Africa. And this is because the priority is being given to mitigation, which is currently receiving 90% of the global climate finance. 5% only goes to adaptation. And the remaining 5% is split between those that we call co-benefits between adaptation and mitigation. And this is, I wanted to make that point because Africa's priority on climate change is on adaptation, but yet adaptation is receiving the least of the existing global climate finance. And even when you take Africa as compared to the rest of the world, the continent receives less than 3% of the global climate finance. Last year, of about 632 billion of the global climate finance that was mobilized globally, Africa received around 20 billion. And out of the 20 billion, 2 billion are mobilized domestically through domestic resources. So this is just to set you the context in order for us to understand where we are coming from. Secondly, I think it is important to note that even in Africa, out of the climate finance that the continent receives, more than 80% is from public funds. So it also shows you that private finance is still lagging behind in the continent. So this will bring us to the discussion.
I would say. It's almost non-existent, the private finance. The private finance, I think it's almost lagging, I would say non-existent, and correct me if I'm wrong. The other thing, I would like you to delve on food systems. Of this 5% for adaptation finance, how much goes to food systems? Because this is about our livelihood. It's not about economic growth. Adaptation finance is about survival. So I want you to scope on this and give us your insights.
I'm coming to that. I told you that I want to set the context first because I in many fora I have been, the private sector is yet to understand the business, what we mean by climate finance, what we mean by adaptation. So it's important that we get that common understanding. Now, on your point, I'm coming to the food system. On the fact that the business case of adaptation, there is clear business case for adaptation. Several studies have recently suggested that every $1 you invest in adaptation will bring higher returns on investment of about $7. And with significant co-benefits, triple co-benefits. You reduce the future loss if you invest as private sector, you invest in adaptation. You are contributing to reduce the future loss and climate impacts. You also, there are positive economic benefits when you invest in adaptation, as well as social and environmental co-benefits. So there is a business case for it. Now, the issue is how we create the necessary enabling environment to invest in adaptation. How can we make sure that the private sector could get confidence and come into the adaptation space? This is where the issues are. Now, coming to your point, I know we are managing time on food systems. The bank has been prioritizing, food security and agriculture for several years now. As you know, we have 5 priority areas in Africa. The first one is to light up and power Africa, and the second is to feed Africa. So, as part of the Feed Africa strategy that we adopted in 2016, the bank has implemented several flagship adaptation programs already. For instance, we have currently what we call the Africa Adaptation Acceleration Program. It's a 25 billion program. And one of the pillars of the first pillar of this program is actually food systems. How we provide innovative and digital technologies to improve agricultural production in Africa. This is a major pillar of this program. And as far as private sector is concerned, we are currently piloting an initiative we call Adaptation Benefits Mechanism. It's a mechanism to put a price on adaptation, a cost on adaptation, and to also attract private sector into adaptation projects. Actually, there are several projects that we are piloting under that initiative, and this initiative is also recognized under the COP27, under the Paris Agreement, as one of the innovative tools to implement the non-market mechanism of the Paris Agreement. And on also private sector, we have championed several initiatives like African Financial Alliance on Climate Change, which brings together the commercial banks, insurance companies, etc., in order to green their portfolios. Last but not least, we are today going to launch an initiative we call Alliance for Green Infrastructure in Africa, just here in the Africa Pavilion, which is aiming to mobilize 10 billion for green projects in Africa, most of them on adaptation. And let me finish on a program that Egypt is leading, the NWAFI program, the nexus between water, food, and energy. The African Development Bank is leading on the water pillar of the NWAFI. We are providing nearly 1 billion for the water pillar for NWAFI. Actually, there was a ceremony yesterday whereby we signed the agreement, and the bank is also going to co-finance the energy pillar with about 300 million US dollar for the energy sector. Thank you.
Thank you, Dr. Dosuma. I think you nailed a very important point that there is a business case, actual one, for adaptation projects. And now, Dr. Roberto, who is joining us actually from Italy. Are we connected? Dr. Roberto has so many hats. He used to work in FAO, so he has good understanding of food systems. Hello, Roberto. I was just introducing your several hats to the audience. That he's a financier. He introduced blended finance. He has a PhD in technology. So, I mean, he has a very well-rounded interdisciplinary knowledge. And this will invite us to, I would like to welcome you first. I would like, can you hear me, Dr. Roberto? Connected. Okay, maybe we can move to Talha Karim, Chief Risk Officer. And I mean, you've been listening to the risk concern, the insurance, the de-risking, and the adaptation projects. What's your insight on this issue, risk?
Thank you. Thank you, everyone. Thank you, Dr. Dalia. Good morning. Thank you, panelists. I'm so glad to hear panelists. So there is a sense of optimism. There's a sense of bankability on the adaptation projects. And sorry, can you hear me? Yeah. And I'm glad the comments, especially for all the panelists, and starting with Mr. Osama, in terms of de-risking. I think from a risk perspective, that's very critical for us in the private sector. Of course, the MDBs are going to be facilitators, but we need not only local partners in the private sector, but international partners. And in CIB, we've had some good experience from European clients who have actually partnered with us in Egypt with projects that are profitable and bankable. So that's one point I'd like to say. The second point I wanted to make was model adjustments in the private sector banks. We have to adjust our models for these projects. As you know, in Africa, most of the part of the countries have taken the IMF program initiative. And one of the initiatives for the IMF is to lift subsidies. So there's a case where prices of water, electricity, these subsidies are going to increase. And I think the private sector banks have to adjust their models now and have for a forward-looking valuation, which might improve your business case. Um, the third thing I like to suggest, and it's really essential for the private sector, and we can get the help from multi-development banks, where we need advanced feasibility studies, research, and an update, especially for the local private sector banks in Africa, on the technology advancements. So this is very critical for us to assess projects. As Mr. Hussein said, that when we're doing the assessment, we don't have the expertise and we need to build the expertise, and we're looking for support and partners in the space. The fourth thing I like to highlight is it's all about value creation, which is thinking about the long term, not thinking about the short term. Um, we, as institutions, we still work on our traditional KPIs on profitability, but we're not looking at value creation. What we can do now, which will better support the future, better support and increase the GDP. If we don't do these projects, we can miss out on the GDP growth of such countries. Um, Lastly, as my colleague Mr. Hussein said, awareness, communication, education is needed for all the stakeholders. We're in this together, and we need better education and get up to speed on these projects, on the latest technologies, and on the research. So thank you very much. Lastly, I'd like to say one more thing. We're always used to the black swans. As you know, black swans are the extreme events. But climate risk is a gray rhino. So I'm not sure if you know what a gray rhino is. Gray rhino is it's a risk that is there. We know about it. We know when it's going to happen, but we need to do something about it. So a gray rhino is as dangerous as a black swan. So thank you very much.
You, Talha, for making the point that climate risk, and you mentioned it, Mr. Hussein, it's new to us. Even the very well-educated bankers are not comfortable with climate risk, right? We understand. But the good news is that you're picking it up very fast, because we really don't have the luxury of allowing it to get slowly internalized. And now I hope Dr. Roberto is connected. Dr. Roberto, can you hear us?
I can see you, but I don't know if you see me and you hear me.
Well, the sound is not clear, but
Can you hear me?
Dr. Roberto, you're there.
Okay, good morning. Good morning, and thank you for the interesting session.
No, it's the same. You can hear us. Yeah, the point
Yes.
is we can't hear you.
Oh, I see. But my microphone is active and working, so I don't know what to do. I really don't.
Hello, can you hear me now? Hello, good morning. Can you hear me now? Hello.
regards to insurance and the risking, maybe the formula will be scaled. And that's my issue and my question to you, Dr. Dursuma. You have evidence of success. You already have proven successful adaptation programs. My question is, why aren't they scaled? Why are we short of scaling them?
Thank you for the question. There were several years ago we have been saying that adaptation is new. We needed to test it. We needed to pilot it. That it is not yet understood. So we started with pilot projects in several countries. And I believe that it's time now to scale up those pilot experiences. So that's the reason why the Africa Adaptation Acceleration Program was created last year to scale up, to move from pilot to transformative projects. So it's a big project. As I said, it's a 25 billion program. In the past, we have been having adaptation projects at a very small scale level. And that's the narrative of adaptation that we also need to change. Adaptation is being characterized as in a very small size. But we know that there are big investments that are needed in adaptation. If, for instance, you want to transform food systems in Africa, you need to invest billions. It's not about millions. If you want to decarbonize the electricity system in Africa, it takes a lot of money. Area also currently we are scaling. We have recently a new program, a 20 billion program called Desert to Power, to create the largest solar zone in the Sahel in West Africa, using solar energy. So we are already scaling up. We are calling on join us to really scale up investment that are already working. And we know that they are working in various geographies, various countries.
Is the figure that we have to
definitely we can progress and we can move. And I'm very hopeful. We have several discussions with the government here in Egypt about some projects that are mega projects that the government have them in their national development plan that we're hopeful that we can execute in the near future.
Well, I think you brought a very important actor that's not represented on the panel. Unfortunately, Dr. Rania is trying to join, but she is on another panel going through the launch of the Finance Day. But on her behalf, we all know that this started to change, that right now NOAFI is being launched by the Egyptian government, by the Ministry of International Cooperation. It has an excess of energy, food, and water for $14 billion. And it's being attended. I think the food is with the IFAD, water with the African Development Bank, and the energy with the EBRD. Now, where are the commercial banks? So we have MDBs to facilitate, to oversee the process, yet commercial bank and private investors are not there. Why? Because we're not sure it's 100% bankable. There is a pipeline project, and this also started to take place in other African countries on the margin of COP27. So it started on the policy side, and as Talha and Mr. Hussein and Mr. Talha mentioned, the regulatory transition with regards to pricing and removal of subsidies started to impact the market mechanics. So everything is working together towards, I mean, everything is helping us. But the fact remains that the private sector, represented in MDBs, consultants, investors, commercial banks, insurers, should connect to make sure that food systems are profitable. The problem, our established processes, I would say, and you hinted at it, is that our business model that we are used to can prove that a polluting project is profitable. We have been used to that. Too bad that investing in food doesn't have a business model. We are not there to monetize the environmental and social impact, which is essential for our survival. So what we're calling on today is to revise the business models. And too bad to is not there because during our pre-talk, his point was that science can improve crop production. Science can take the risk. Small tips. I was really impressed listening to academicians, how they can improve soil profitability and how can they improve risk. So the risking is not just insurance. The risk is also and research. So hopefully one day we'll get him on the table here in Egypt, studying, brainstorming one of NOAFI projects to make sure they are investable. Back to Dr. Dursuma. What would it take if you want to get Africa to feed itself?
Well, that's a very important question. In my view, it takes maybe three things. First, finance, of course. Second, technology. We need technology. We need to develop our own technology. There are some indigenous knowledge technology that exists, but we need to bring them at another scale. And another factor I see is capacity. Capacity to do more than what we are doing so far. So if you are able to bring in investment, technology, and capacity together at the same time, we'll be able to feed Africa and even feed the world. Because Africa has a huge potential, you know.
very much towards saving resources. So when you're saving resources, for example, all the villages all the compounds on the north coast will not be allowed to use fresh water. They will have to desalinate. So the regulations are moving towards helping at the finance. In addition, technology, desalination plants are smaller, cheaper, more efficient. So the economics of each project are actually becoming much more favorable. I think what we should do is, I agree with my colleague, technology is extremely important. And we as bankers should be aware. It's not enough that we understand every little fintech that may or may not do anything good. This is much more important. We really have to understand what's happening there and be abreast, because things that were not profitable a year ago will be profitable next year, and we have to be ready to finance that. So I end it on an optimistic note.
Yes. Thank you. Another point, did you ever consider the risk of starvation? When we talk about starvation, what comes to our mind is the social part, you know. Did you ever consider that starvation would destabilize our balance sheets? The impact of drought, starvation on our balance sheet. And this brings me to the TC climate change.
Points. Balance sheet. The challenge, of course, is this is under development. It's something new. For us, but we are certainly working on
projects as such can pick up. Local players, which are the commercial banks, they have a major role to play. But more so, we see in markets where we are operating, where local banks are not putting their in order to help the private sector. Banks we see, and for the right reasons, they are geared toward profitability. They are looking strictly at balance sheets, but when you look at a business, it's different when you look at small to medium enterprises who are willing to do it themselves. we would like to see feed the whole Arab world. So we can invest in Sudan in order to feed X country. Or we can get some water from one country to the other to solve the issues of deforestation and desertification. All of these issues, they have to be thought of, and government engagement with each other. But we as well, that we have a region that infested with issues that are, these are issues that, so we have to work with policy in order for us to move and to bring people on the same table to make this project doable. It cannot be done on a single country base. It has to be done on a regional level in order the complementarities within the countries. And we bring the technology, we'll bring the know-how, we'll bring the manpower, we'll bring the finance, and this is when it happens.
This is a profound comment into our discussion, the regionalization, the continent-based solution, because we cannot do it as Egypt, as Uganda, as South Africa. The geopolitical crisis that's taking place and it's expected to increase. Food is an issue, and we need to make sure that self-sufficient and sustainable food systems are in place. The point that we want to make here, I mean, for a long time we have been waiting for governments to get together. This is the 27th round of COP, and we're still discussing it. But one thing we're sure that climate change is taking its toll on Africa, on Africa's survival. As we aspire that COP27 will address climate issues, Africa cannot afford to wait. And I think it's upon us as financial institutions, and that's the call of the brain trust, to take the helm together, investors, technology, science, and this is an extra mile on part of banks. It's no longer funding a profitable project. Because I mean, I have been into this. I mean, we bring a project and say, no, it's not good for investment because Amr will nail it. So I think what we're getting at is the power of finance, the power of financial institutions, and the power of maybe Egyptian banks could invite other banks, and we have Mr. Etribi, Union of Arab Banks. It's a good starting point to address new models, to get the financial industry to align on a vision, get the whole ecosystem, the governance mechanism, to make sure that food and water or food systems are very robust in Africa. At least we are self-sufficient. We cannot wait for currency to get addressed, currency issues. We cannot wait for the Ukrainian to end, to be confident that we will be in good shape. I think I'm really grateful for the panelists. I think we have, because we lost Dr.
for all of the institutions available is very important. Another thing that is very important from your preliminary comment, the fact they stayed for 40 or 50 years teaching us profits and shareholder value. And we excelled it. And after excelling, they came and told us, oops, we are sorry. We for people and planet. After we built and integrated all our business model, including the credit risk or the credit academy at CIB. My question for the panels, and I think this is an important question. Myself, see you. There is
In respect of your other question, it not be but the market, everybody be aligned with the SDGs, with ESGs. Your pricing is going to be the same, whether you're going in this direction or the other direction. As it was mentioned here, your model of the way you're doing business, like me, like them, has to change. We have to adopt, and we have to adapt to different circumstances that are around us. You cannot continue like that. We might go against the current, but it will take you where you want to go, because the whole stream will be you'll be going against the stream with time, not now.
Given.
So I'll just echo the gentleman's focus on opportunity. This is the greatest investment opportunity that any of us are going to see in our lifetime. So the transition to net zero. So the opportunity is for corporates and investors to grasp that opportunity with both hands. There's challenges, of course, and I think your point on data and disclosure, and clearly that's incumbent on governments to be putting in place processes so companies can disclose comparative. But I not emphasize enough, we engage with investors all the time and we talk about the opportunity. We start on the opportunity. We don't start talking about stranded assets. We talk about opportunity. We talk about EBITDA. We talk about enterprise value. We talk about the things that investors understand, because then they think about wanting to do it themselves. So I'd just like to say 100% agree with that.
Mr. Hussein.
Dr. Heb, I think I just want to, you said something very thought-provoking. Would we like to finance something that's very, very risky and we don't see? You've just described the fintech, right? And everybody was queuing up to throw money at them. So I think ultimately it's imaging, it's packaging, it's knowledge. We'll get there. And it might not be traditional finance, but it will happen. It's much more worthy than fintech. People are throwing money at things that will never make money. And it happened, for those of you old enough to remember, the .com. It's just how you package it.
I think packaging and innovating are keywords in what we're doing. I mean, definitely we need to have a revision of business models and we need to repackage our projects. There is a question here, Sarah.
Thank you very much for the very discussion. Saleh Sored Dahab, head of the Climate Action Task Force in ISIC. So my question is regarding ticket size. You know, we all know that the mitigation is usually high capex, medium tenor, longer, bigger project. But for the adaptation, and yesterday we heard Minister Hala talk about rural projects, and the ticket size was much smaller. So when we're talking about adaptation, usually, depending on which part of the nexus you're looking at, the ticket size. So perhaps a way to get around that is to to create a fund, or how are you going to get down to the granular level, taking into account the small ticket size? What's your appetite for? How is it practical to do? And also, my colleague has a question.
etc. Include
All right. Now I wear a hat of a panelist, not a moderator. The basic assumption in this model is that no concessional loans. Forget it. For one thing, concessional loans are minute, tiny. If we get them in the formula, we won't have enough money. The Brain Trust targets the trillions, targets private investors with very much focus on risk return. This should be respected. That's why we need to innovate new business models. Maybe the de-risking, maybe the innovation in the instruments, the financial instruments, in the structuring of the project. I mean, that's why these blue issues or tools to make sure that environmental and social risks and returns are factored in. They yield economic return because now it's a very dynamic landscape. So let us agree, when we talk about adaptation, it should be 100% a business case. And if we don't do that, we are harming the issue on the short term. I mean, maybe blended finance will be good as a sweetener, but on medium to long term, we will. So again, it's all about, if we apply the existing model, you're right, someone will pay the price. But if we develop new models to monetize the environmental the consider of adaptation. the region. Thoughts that